We're on the verge of either witnessing the biggest bull trap ever or the biggest bear trap ever, and things are really building tension. We're going to talk about what it means for you guys, what you can expect next in today's show. Smash the like button, hit the bell notification, and subscribe to the channel. Do bulls have enough power to bulldoze price through these current levels? Because euphoria is starting to come back into the market. You can see the excitement on crypto Twitter. A lot of people getting very bullish vibes once again. And just let me kill that call 1 second, guys. Somebody is phoning me. So let's go through everything over here. First thing I want to start off with over here is having a look at, of course, the stock market, right? S&P 500, which is this relief rally? Is this a dead cat bounce coming into resistance? Well, according to this chart, the answer would be absolutely yes, it is, because you still have the presence of the downsloping trend line over here coming from the RSI. And ultimately, the stock market still needs to break through this key level. Now, that doesn't mean that Bitcoin can't continue towards the upside. Of course, we know that crypto has somewhat decorrelated from what the stock market is doing. It just makes it a little bit more risky, right? When you witness that this is coming into resistance. The other thing that we have to pay attention to over here is the volume, right? As you can see over here, we sold off on pretty high volume. Look at the volume that increased as prices were coming down. And then on the bounce over here, the volume has dropped off significantly, right? So the volume is diminishing more and more. Similar to what occurred over here, right? Look at that move towards the upside. What happened to the volume? Volume came down, and then volume picked up towards the downside, or volume picked up again, moving up, and price dropped towards the downside. So we have to be careful that something like this is not taking place, as we do see the relief rally coming into play right now into those key resistance levels that we're looking at, right? The good news is you're breaking the downsloping trend line, which reduces, of course, some of the speed at which this move is moving towards the downside, which means maybe you won't make new lows. Maybe you just reject, you come down, put in a high low, volume starts to rise again as the market attempts to work things out. Remember, they haven't resolved the Trump tariff wars yet, right? That's still in play. We're still in the 90-day pause while they wait for the next major answer. But the key levels to be watching out for, of course, is still going to remain the same, right? It's been the same target ever since we put in that low over there, and that is 5,700. That's your 200-day moving average, which is rolling over. It's also your golden pocket between the 618 and 65 level on that fib retracement, right? You can see the same thing occurring over here on QQQ. Look at the volume, right? As price is moving towards the upside into key resistance, the volume keeps dropping off over there. If we look at the RSI as well, you're still yet to break these key levels, right? You have this resistance line that's coming into play. And therefore, the area of interest to reclaim on the QQQ, which is the NASDAQ chart, which is actually what Bitcoin usually trades most correlated to, is going to be that $492 level, right? That's a key zone to get above. And then we have the Dow Jones. No different, right? Just a little bit weaker than the rest of them. Downsloping trend line, got a lot of work to do for the RSI to even get back to that key level. And then what do you have over here? You do have a little bit of a gap, which still needs to be filled, and that gap lines up with the 200 moving average. So the targets remain the same, right? Nothing has changed over here. Watch as price rallies up over here, another 3-4%. That could bring in the final bull trap, right? I'll show you what the bull trap would look like, what the trigger plan would be if that bull trap does play out. Then you guys can make your own relevant decision, right? Because the volume still coming down in crypto, right? Lower lows and lower highs. If we zoom in, it looks like it's starting to roll over on the 7-day daily exchange volume, which means that it is in agreement with what we're seeing in the stock market and the stock market volumes and 24-hour liquidations hovering under that $250 million level, which we consider low volume, low liquidations, an inability to choose a direction from the market. The market could be stalling out. Now, if you do want to trade the stock market as it comes into those resistance levels, remember you can do so over here. You have the S&P 500 on BTCC. There is a link in the description below for those of you that do want to trade it. That is a tradable setup, right? If we go through over here, what would the tradable setup be? Remember, we're looking at, of course, also trading things like Tesla, trading NVIDIA, trading Coinbase. All of those are listed on BTCC. So what would the trade setup be over here? The trade setup I'd be looking for would be a short trade, and that would be coming into this key zone over here, and we'd be placing the stop loss just slightly above that previous lower high. That would be the key zone, looking to scale into this zone over here. And then you can probably target back down near the lows. That's giving you a very, very, very favorable 3.6 to 1 risk to reward ratio. So there it is. If you do want to trade the S&P 500, you of course zoom in on the low time frame to get your perfect entry over there. And you can claim your sign up bonus using the link in the description below, right? Giving up to $60,000 as well worth of prizes for their trading competition. So DXY still hovering under the key level. We're looking at a breakdown for this. Of course, if it does start to reclaim and break back above 100, that's going to be a little bit troublesome for the rest of the market. Gold is another one to look at, right? You can also trade gold short over here on BTCC. But gold, I think, very, very likely has topped, right? We've spoken about this for a long period of time. And part of the reason is because of course, that TD sequential 9 top, right? Look at that spinning top candle that's occurred over there on the high time frame. Here's your monthly. We still have low prices that need to come in. Really, we said if we take out that white line, look, it's probably still going to close green for the month because we only have 1 day and 15 hours left to go to close off this monthly candle. But the weekly will probably start over the next couple of months to work its way down and to start to take out this $3,000 level. So for those looking to scale into short trades, it's got a lot of volume when it comes to trading gold, one of the most tradable assets out there. Now, if you do play out the bear traps or the bull trap scenario, at least bull trap scenario, meaning prices aren't going to go much higher and you're going to go down, then you'd need to see this play out as an ABC, right? Remember, we have the Elliott wave count from the bottom, wave 1, wave 2, wave 3 towards the upside, wave 4 towards the downside where we put in that August low, and wave 5. Now, it's still debatable whether this is going to be an extended wave 5 or if we've actually reached the end of the wave 5, right? The truth is, no one knows. We don't have the answer yet. We need a little bit more information. Of course, if prices do consolidate above $95,000, that can start to shift the structure drastically and suggest you're probably going to continue towards higher prices. And then you can extend this wave 5 a little bit further out. How much further? Well, the first area of interest was always going to be that target of the 1.618 fib extension. And that would have taken price about $125,000, right? So basically marginally higher. I know there are people out there that have calls for, $200,000-$300,000. If so, well, of course, we'll reevaluate as price comes into those key levels. But right now, structurally, this does create the environment where you could theoretically start to put in a bit of rejection. The good news is that you are above the 21 weekly exponential moving average. So I know it's very divided and very split, and you can literally see it in the polls, right? If you go to the polls over here and we look at the polls, high time frame, are we witnessing a bull trap or a bear trap? It's pretty much 50-50, right? 47% of you say bull trap, top is in. 53% of you that voted on this today say that it's a bear trap and the bottom is in. And I don't think that either of you are wrong being split, because it is really a split decision right now, right? We need to see who's going to take ultimate control probably over the next 3 weeks, and then we'll have the answer as to where the most likely direction is. Now, in terms of the bearish case scenario, this is exactly where you'd want to see that rejection take place. You're still yet to break that stop and reversal indicator, which hasn't occurred yet. A break of that would start to slowly move the scale in favor of the bulls and suggest that maybe they're a little bit more correct to suggest that we're going to have an extended wave 5 and we're going to actually continue this bull run. Now, remember, trading is probabilities. Trading is looking at both sides of the picture and siding with the side where the probabilities are highest. And in fact, even taking trades in both directions, pretty much simultaneously, right? You can enter on a low time frame into a short position to hedge and insure yourself. It's insurance. And then you can, on a different time frame, enter into long trades where you're looking for continuation. But would I long right here, right now? When we were looking for long trades, it was between $81,000 and $83,000, right? That was further down here when we started to break towards the upside. Would I be looking for long trades right now? Absolutely not. I wouldn't look for long trades right now unless we started to break above, because you do risk the potential of moving up a little bit higher. And I think that would be what would create that bull trap. Look at the volume diminishing as price moves towards the upside, pretty much exactly what the stock market is doing. And that is usually a warning sign and suggests that you need to just be a little bit careful, right? You have your parallel channel, which has been respecting these boundaries, right? The lower boundary and the upper boundary over there, that's your parallel channel governing price towards the downside, coming into the high volume area with the points of control all at the 0.65 level. That's exactly at $97,176. That is the level, right? So I could see a world where you probably spike a little bit above, maybe even to $100,000, capturing a whole bunch of this liquidity that's situated over here, and then deviating and coming back down. So I said, what would the trigger plan be, right? The trigger would be if you did do that and then you broke back below $97,000, then you have your trigger. That tells you all systems go. This is now probably a bull trap, meaning prices are going to go lower, right? A bull trap means that it sucks all the bulls in at the worst possible time, and then prices drop lower. Now, with that lower drop, I'm not suggesting that you're necessarily going to break down to new lows and go into a bear market. Again, we have to reevaluate and weigh up the probabilities. I do see a possibility, which we outlined for quite a long time, where maybe you just come down and you form a right shoulder, right? So you got your left shoulder, you got your head over here, and you got your right shoulder in terms of the inverse head and shoulder formation. And then you can start to look at targeting some higher prices, right? We'll need to evaluate the speed of the move and what the volume is doing leading into that next part of the move, right? So that's one thing that we're looking at. Now, again, what would the bear trap scenario be? Well, you need to follow the green trajectory, which is this one over here. In order for the bear trap to play out, meaning you're getting people very, very bearish coming into resistance, which is expected, but to flip that bullish and get all those bears to flip long, what you probably need to see is you need to see a break above that $97,000 region, which is your golden pocket, as per the little green drawing over here, and you need to consolidate and hold multiple candles over there, and then you can look at acceleration into this region, which I would say is most likely going to break, right? We've spoken about that, and if you do break that level, then you start to move up to $125,000, $130,000 level very quickly. But remember, we're looking at this off of low volume, right? And it is a little bit 50-50 because the bulls have shown incredible strength, but we do have low volume, right? We have low volume. We're coming into resistance right into the area of interest. We just got there quicker than what we originally planned for, right? When we're looking at these lows, we were saying that price is probably going to move up into that anywhere between $92,000 and $96,000, but we didn't expect it was going to do it that quickly, right? The speed at which the move occurred drastically shifted a whole lot of things, which brought momentum into the bulls' favor. And you can see the momentum shifting on the weekly scales. If you look at things like the momentum oscillators on the weeklies, they are starting to shift towards the upside, right? So what you're looking at basically is the dailies, where you're looking for potential rejection into a high low, and that will allow for the dailies to reposition in alignment with the weeklies, which can then start to bring new momentum in, and then you can push up towards those highs, right? So very, very divided, very, very split. But right now, this is what that bull trap scenario would look like, is maybe one more spike up, right? Take out that liquidity over there, as I've shown you, then break back into the trading range. Now, you don't necessarily just suddenly start shorting over here, right? You would need to wait for that confirmation. You'd need to wait for this portion to play out, right? The spike above, the break back under. Once you break back under and you set in that lower high, right? If we zoom in over here and you look at this, you're expecting a high and then a lower high. Once you put in that lower high, then that's your confirmation. That's your entry. There's your stop loss slightly above there. And then you can start to target back down, ride your stop loss down so you have a risk-free trade. And then whatever happens, happens, right? Now you have both longs and shorts on the table, and you can let bulls and bears fight it out. And whoever's going to win is going to take one of those trades into the profit for you. So that's what we're looking at. We'll talk about pullback levels should it happen, because we don't have the confirmation yet. Right now, the bulls are still holding things up over here. And this is basically just the cautious zone, right? This is the area where you're looking for the bull trap to take place, where you're looking for the short trade trigger. I don't think you have a trigger. I don't think you have the trigger yet, right? You have to see price still spike a little bit high. That's going to bring more optimism and euphoria. How high could it be, right? Well, you could probably spike above these levels over here, possibly even hit 100K. That would be a 5% move. And then you still have your bear moon, and the bear moon just suggests over the next 15 days, you're expecting price to pull back significantly, and whether that puts in a high low or it drops all the way down, we don't know, right? Another chart that we have to keep a close, keen eye out on is still this. Still chopping about, right? Look how clean this range is. Pretty unbelievable, right? Caught between 4.98% and 5.15%. This is the USDT dominant, right? So right now, this does still favor the bulls. Why do I say it favors the bulls? Because trend comes first. And ultimately, if you look at this, it is starting to look like a picture-perfect textbook bear flag that's occurring, right? And if the bear flag occurs, the target level for that bear flag would take price down towards this side. So what's in the bear's favor, right? In the bear's favor, you right now have low volume. That's in the bear's favor. Stock market coming into resistance with low volume. Crypto coming into resistance with low volume. Bear moon. Those are the three things that are in the favor of the bears. What's in the favor of the bulls? Well, right now you have momentum in favor of the bulls. They have a lot of momentum right now. You have created a higher high. You have the USDT dominance, which is showing weakness as well, coming into what looks like a picture-perfect textbook bear flag, which would send it all the way down to this level. Now, if it was sent down into this level over here, that's going to create a mega pump, right? Honestly, that probably sends Bitcoin to 125K pronto, very, very, very quickly, right? And you have momentum, which we spoke about, which is those higher time frame momentum shifts are taking place. So if we look at the Binance liquidation heat map, also liquidity is situated a little bit above, which is indicative that you could get that one more spike. But again, that's where you need to see what Bitcoin's made of. What happens when it does spike into those levels, right? The next 3 to 5% move, does it hold that? If it holds that, bulls are probably still in control and going to continue higher irrespective of the low volume and the bear moon, because price action trumps all, right? The other factors that we look at are just underlying factors that might be signs and symptoms of what comes next. But at the end of the day, price action is the most important thing, because that's what pays you, right? High highs and high lows, buying low, selling high, or short selling high and covering your shorts lower, right? That's ultimately what pays you. So right now we can see ETH still holding up over here. It's been very, very, very choppy all over the place, coming into the 50 and 200 EMA, looking for the golden cross to take place over there. This has been one of the charts that we've been looking at, and this would be a really, really good deviation. This is one of the also charts that are probably creating a lot of confusion within the markets, because we're seeing the potential for ETH BTC to bottom. And ETH USD doesn't look too bad. It's attempting to hold up, and it's looking to try put in a big move all the way to about $2,000. Now, the implications really shift. If it gets above $2,000, then it really, really, really starts to look good. Now, it's creating confusion because we're seeing these risks within the stock market and within Bitcoin, which means that we always have to take the bullish case scenario within altcoins with a pinch of salt. Because if Bitcoin does go down with the stock market and the stock market rejects, of course, that's going to create absolute chaos within the altcoin sector, where it's going to drop down significantly, right? So that's why I like to look at a bunch of altcoins. And if all the altcoins are saying something good, that it looks like things are coming into a key area where it can continue, then you can start to take those odds and again, favor them on the bull side and say, well, maybe Bitcoin will actually hold up over here, right? So I think time will tell. We're in a very, very interesting place. We have a lot of high impact economic data coming out over the next 2 weeks. We have the next Fed interest rate decision, which is also coming up. I think that is probably sometime next week. We'll have to double check. If I'm not mistaken, it's next week, Wednesday. So Bitcoin, if we look on in terms of the funding rates, slightly positive. Open interest is relatively low, hence the overall volume over here, and the total liquidations are low because there's an inability to pick a side. Let's quickly have a look at what ETH is doing over here on Binance futures and just see where, okay, people are longing over here. Open interest is dropping, but the funding is positive over there, right? So we can look at a couple of altcoins. Let me know if you have any particular requests. As I can just quickly show you over here on ETH, you can see that the momentum is starting to get really, really heated, right, on the dailies. So this is going to be the same on Bitcoin. But then if you look on the weeklies, and we shift onto the weeklies, this is what I mean. The weeklies are really looking bottomy in terms of momentum, getting ready to move back towards the upside and rounding out over here, right? And that's what you need to watch. You need to pay attention to that. As the daily comes into resistance, that means if the daily pulls back and sets in a high low, then you're going to have the optimal time to time the daily shift with momentum with the weekly shift coming off of the lows there. And that can create some great, great, great trades. Maybe, just maybe, we'll eventually get some sort of an altcoin season, right? And if we look at Solana, there's your weekly momentum oscillator. Here is your daily momentum oscillator. Very, very similar, right? Super heated, telling you that you probably need to be cautious. You don't want to be longing at this level, but you probably want to position your mindset that if there is a pullback and it sets in those right shoulders, right, that's probably where you want to start to establish those positions. So you're looking at something like this, lows over there, that's your left shoulder, there's your head, price coming back down, forming a right shoulder into key support. That's the optimal zone to establish those positions. For Solana, that would be about 120. That would allow for that momentum oscillator to slowly reset over there and line up beautifully with the weekly time frame, right? So in the short term, again, I guess you're looking for a little bit of a pullback, and it's preferable to have that pullback, right? Even if you are giga bullish, you should rather prefer that pullback, because when you see price continue to extend, if you see something like this and there are no pullbacks, this becomes unsustainable. And that's where we usually get the big crashes, right? You don't really want that. That's where you lead into those blow-off tops. And basically it leaves everyone chasing price, over leveraging, and then the crashes become absolutely catastrophic. It's better for a healthier market to just continue slowly up, which means you want to see something like this, right? Pullback, reaccumulate. Doesn't have to go that low, right? You might just go into this, just below $90,000. Something like that, quick pullback, reset, high, low, and then continuation. All right, let me know in the comments if there's anything noteworthy that you want to have a look at. Guys, I'll try to do a show every single day this week. I can't guarantee every day. I might miss, I'm thinking Thursday. I might miss a show on Thursday. I am at Token 2049. Obviously, it's a very, very busy event. So many networking things, so many meetups. My social barometer is off the charts right now. I'm definitely feeling it. I'm not used to interacting with thousands of people in person all the time. But if you are there, come and say hi. I would love to see you guys. The event hasn't even started. I'm already tired. It's all the side events that are taking place. But I will catch up with you guys very, very soon. Thank you so much for joining. Appreciate each and every single one of you. Remember, link is below for BTCC. For the rest of you, jump into Whale Room if you do want to be engaged over there. I might not be able to do all the Zoom sessions this week, but you have a rock star team that's looking after you. A lot of traders, they are making $5,000 to $10,000 a day just off of the scalp trading section, right? So that's it. I'll see you on the next one. Have a great day, everyone, and cheers for now.